Starting with the BRVM 10 index closed trading yesterday down 2.1%, a really bearish session there. Meanwhile, the all share index, the BRVM composite, also lost 1.6% to close at 208 points. Total value traded on the market was 762 million CFA francs. And moving on to Ghana, we saw the GSE composite index closed trading at 1,908 points. That's marginally up on the day. Year to date, the market is up 59%, and the GSE Financial Stock Index is at 1,634 points, up about 0.2%. Moving on to Nigeria, the NSE All Share Index, we did see massive volatility last week, and the market was down 5.9%. It continued yesterday. We saw the NSE All Share Index down about 0.4% to 37,085 points. We did see some gainers, however. Cotville, Nigeria was one of them, gaining about 9%, but it was really a story around the losers. The likes of UAC were one of the major losers on the day. But the big talk in Nigeria, of course, has been the fixed income market. The hint of the end of monetary easing, the monetary easing cycle rather, in the United States has sparked a sell-off in emerging markets across the world, including Nigeria, where bond prices and the Naira has come under pressure. So what's the outlook for the so-called hot money coming into Nigeria? To review Nigeria's fixed income market and currency market, we have Sam Ocheo, head of global market trading at Stanbic IBTC, joining us. Thank you so much, Sam, for joining us. And well, I guess there's very little to say. We've seen the Naira now hit 160. It's at about a 12-month low, reflecting the pressure that the currency has come under because of the sell-off we've seen from foreign investors. Talk us through your expectations going forward and what the yield curve is telling you about the outlook for the Naira and, of course, the fixed income market.
Wale, good morning. Yeah, I want to agree with you that we've seen some risk off in the fixed income market, and that has also permeated into the FX market. Hence, we've seen a lot of pressure on the Naira, taking the Naira to about 162.70, 80 on the bid offer. But as at the trading of yesterday, we saw a lot of intervention from the central bank, which brought the Naira back to 160 figure level. That, for any watcher or any person in the FX market, will say this is a major volatility that the currency is witnessing. Right. And in terms of my outlook, I still expect to see some pressure on the Naira because the demand is still out there. We're still seeing some sell-off, but the good news is that we don't expect to see as much pressure anymore. Yes, there were risk-off in the emerging market as a result of the global outlook, the comment from Bernanke as regards supporting the quantitative easing. That led to some sell-off even in emerging markets like Turkey, Brazil, and South Africa. We can see where the currency of South Africa is. We are now open to the world because the investors are all in Nigeria at this time. So the times where Nigeria seems to immune from the world is no more. Now we need to see that the global news also kind of affect our own market. But the good news is that towards the end of last week, we saw some buying buyers again from some of these offshore guys. What that tells me is that we might still see some flows. Would we see it in the quantums in which we saw it with the inclusion of Nigeria in the JP Morgan index? I don't think so. I think there's going to be a slowdown in terms of the buying of Nigerian asset, but again, it's not total gloom. We're already seeing people putting back some risk asset. This will normally happen. The only thing is we should always watch out for disorderly outflows. And when I mean disorderly outflows, is that when there's a crisis, the investors will come in droves to exit the Naira. And that we must always prepare for. So if you ask me, I think I will see stability around the 161 level. But again, that means the central bank must be in the market, supporting the market. Well, one thing I've noticed...
Okay. No, go ahead.
One thing I've noticed is that it's a supply issue.
Yeah.
In the last few weeks, there's been no supply. The offshore investors have supported the level of the Naira for a long while. And with their slowdown, what we naturally see is that the demand that has been out there will naturally outstrip supply. And where demand outstrips supply, what you expect is that there will be depreciation of the currency.
Right. I mean, you hit a very important point there, the fact that we've seen that flow from foreign investors. We've gotten used to it in a sense, and now we're not seeing it. And in fact, when we track back the start of this volatility, it really didn't start with a sell-off. It really started with the reduction of the buying from foreign investors. So I want to get your thoughts on that. that if we do not see foreign investors coming to the table like we saw them in the past, do you think that we could see the central bank open to, say, maybe a new base case of 160 for the Naira? Because clearly the plus or minus 3% was supposed to be around 155. Right now, if we're looking at the interbank market, we are breaking the upside, the upper level of that.
The truth is that the risk off started with a slowdown from the offshore side. Then, because there were no more dollars coming in as much as it used to, we saw the FS coming under pressure. Will that continue to happen? I think it will happen as long as the supply side is affected. The demand right now is so much, and if we don't see much of those inflows anymore, the question is, well, does the central bank have the ammunition to be able to support the currency? If they bring out those ammunition, then they would be able to support it. But again, we have a central bank who is so keen, or we have a government who is so keen about the reserve figure. They would not want to deplete their reserve. So how much of the reserves would they be willing to commit to defending the currency? That is what we all need to look out for and see. But as long as there is slowdown from the offshore angle, we expect to see more pressure on the Naira.
What's your sense of how much we've seen sold off over the last few weeks? In January, the central bank put the figure for the hot money at about $5 billion. I've read somewhere recently that about $2.5 billion may have been pulled out over the last few weeks. Your sense of how much selling we're seeing right now?
No, honestly, I don't think the amount of sell-off has been up to $2 billion. It has not been that much.
Right.
There are other local factors that has caused the yields on the, yields going up. There's been panic sell by locals, and some of the reasons for those panic sell were the fact that there were rumors of pull-off of parastatal funds from the system, and we also had the governor of central bank on air telling the market that there's more risk to tightening than loosening at this moment. The initial reaction from players on the market will be a sell-off, because what that tells us is it signals yields going up, and people would like to sell. And the truth is, the market itself, in terms of liquidity, has been shallow, so that impacted on yield, and you saw yields going up. So in terms of offshore sell-off, it's not as much as people have actually said on the street. If you ask me, locals contributed more to the yield increase than even the offshore. We've seen bits of sell-off, but it's nothing significant. Honestly, I would not even put it to up to $1 billion in terms of net outflow.
Okay, let's come back to the locals. We're now seeing with term to maturity around 4 years at 13.5%. That's looking attractive. At what stage do you anticipate that the locals will begin to buy again?
Well, in terms of buying, you see, we've seen locals also participating. At 13%, we saw some of the PFAs coming back into the market. They've stayed away from this market for a while, but at 13.5, we saw some of them coming into the market, which means they are good levels for even the locals. And again, this yield went up to as high as 14.5. 14 to 14.5 level. Some of the offshore guys that exited actually came back to the market, and so you find out that every level.
So is that the level? Is that level you think people will buy at 14 thereabout? You think that may be the support level, if you like, for the bonds?
If you ask me, it's a support level. 14 is a support level, but the truth is, whatever happens in the market, a new level is always created. At some point, we thought 12% was a support level for people to buy. It went to 13. We thought these are new levels. We got into 14, and who says? Well, 14, as good as it is, 15 might become another level.